China's loan growth rebounded in May after PBoC Prods Bank's credit growth in China picked up in May, after the valuable bank leaned on the country's industrial banks to do greater to aid an economic system suffering from COVID-19 lockdowns and a grinding actual property disaster. The People's Bank of China said total social financing, the broadest measure of lending in the economy, grew via 2.79 trillion yuan, $417 billion, after slumping to most effective 910 billion yuan a month earlier, while the key economic hub of Shanghai joined the listing of areas and towns beneath COVID-19 lockdown measures. New loans issued rebounded to 1.89 trillion yuan from only 645 billion a month in advance, the bottom total in over 4 years. M2 cash supply growth additionally extended to 11.1% on the year, from 10.5%, defying expectations for a slowdown to 10.4%. The PBoC had urged banks in May to lend greater to small and medium-sized organizations, many of which operate in a service sector that became specifically tough hit by way of the lockdowns. It had observed that up through slicing its reference price for 5-year mortgages, although the direct economic impact of that became visible via analysts as limited. The PBoC's measures have been a part of a broader, coordinated monetary and monetary help package deal, wherein the fiscal measures have been more crucial in supporting call for. Hopes for broader assist from the significant financial institution within the form of interest charge cuts rose on Friday after Beijing stated customer inflation stayed at 2.1% in May, bucking the global trend of higher costs. Producer charge inflation additionally eased to a 13-month low of 6.4%. Analysts have had to slash their increase forecasts for China this year as lockdown measures have stored almost 500 million human beings far away from shops, eating places, trains, and, in many instances, workplaces for the closing 2 months. The Organization for Economic Cooperation and Development reduced its forecast to 4.4% on Thursday from an earlier estimate of 5.1%. The authorities' forecast is still for 5%. Hopes for a sustained revival in financial hobby had risen after first Shanghai and then Beijing relaxed their regulations on mobility inside the closing couple of weeks. However, Shanghai government placed over half of the city's 25 million inhabitants below fresh regulations on Friday after detecting 11 instances of COVID-19 in what appears to be a brand new outbreak.